Hello? Okay, so now you should hear me. Sorry, guys. Audio was off. I don't know why. So that was a good start into the week, I would say. So yeah, as we can see on the 15-minute chart, price is going lower, having a retracement back into what? We have relatively equal lows and we have this new week opening gap right here, okay? So my expectations for today's New York session is that we're going to have a retracement all the way back down into this new week opening gap. So yeah, okay, audio's fine now. So yeah, like I said, I want to see retracing back into new week opening gap. That's a huge draw for price. Why? Because there was not any trading at all inside of that volume imbalance. Okay, there's a void of any kind of trading. Okay, so that's always a huge draw if there's no bodies or wicks laying above it. So we want to see price come all the way back down into it. I would say, yeah, let's have a quick look at the daily chart as well. As far as the daily chart, you can already see I mapped some liquidity pools out. Okay, so we have taken out relatively equal highs. Okay, we have this previous month's high and we have these relatively equal highs, which are all-time highs. Okay, so and price has been pretty bullish so far. Okay, that's same thing in here. That was a liquidity void in the past. Now we've balanced this price range. Okay, we've laid bodies on top of this green shaded area, which I want to see with today's new week opening gap. Okay, so relatively equal highs, relatively equal highs. We've taken out sell side. This stayed open, which is a really bullish signature, price signature. That price is, yeah, it has it urgent. It wants to get somewhere fast, and as you can see, fair value gap, price came back into midpoint, rejected it, traded down into the breaker as well, and this inversion fair value gap. So we are pretty bullish. Okay, pretty bullish. So that's lay of the land as far as the daily chart. So we have a tiny fair value gap in here, which no, it is actually not really tiny. We have the volume imbalance on the lower end here, so that's actually the fair value gap. So yeah, let's map it out and see if price wants to go lower. We have FOMC on Wednesday, so Monday and Tuesday can be a little bit, you know, yeah, more difficult to navigate around and predict price action. So yeah, let's go back into the 1 minute chart, and as you can see, price, like I said, reversed from here and went lower into the new week opening gap that is sitting right there. Okay, so what we want to see now is a long. I'm looking for a long. We have these relatively equal highs. Oops. We have these relatively equal highs, and we have the pre-market session highs right here. Okay, so we have buy side liquidity resting above here, sell side taken out, new week opening gap traded into. So sell side has been delivered. Now buy side is still resting above in here. Okay, so that's what I'm looking for, and yeah, let's see what we can get today. obviously this is no financial advice, okay? So everything I'm talking about is my own opinion, and I'm not telling you to buy or sell, okay? That's important. Yes, sir. So let's see. So we have potential first percent fair value gap in here. Yeah, we already have a fair value gap in here, which you could use as the first percent fair value gap. But since our bias is bullish, we want to see a bullish busy fair value gap. So there we have it. To be honest, I would have preferred price to leave it a little more, create a little bit of bigger displacement in here and not wick too much down. But yeah, I mean, no market structure shift yet. So let's see, what is NQ doing, what is ES doing, and what is Dow doing? You want to have a look at all these three averages and see if they are in sync, if they are moving together, if they are moving in the same direction. If not, then it's more likely to see a high resistance run. Okay, so I'm looking at the Dow, S&P, and Nasdaq, and they are more or less moving lower. I mean, you can see here is the Dow. We have the New York pre-market session and Dow moving lower. We have S&T on the lows. Here's, come on, boy. Yes, is right here. Also moving lower. Relatively equal highs in here. So yeah, they're moving in tandem. So keep that fair value gap here. Pay attention to that one. So this is all messy price action here. So we wanna wait and sit through the first 30 minutes. To be honest, I prefer trading from 10 to 11 because the first 30 minutes recently have been pretty volatile, and it's more difficult to trade the first 30 minutes in comparison to 10 to 11 a.m. because obviously 10 to 11 a.m. the first 30 minutes are done and you have information and reference points that you can refer back to, and most of the damage is done in the first 30 minutes, so you don't want to get caught up into some kind of manipulation lag or whatever. So if you are a beginner or not sure about the current market conditions, market structure, and maybe your model is not talking to right now, just sit through it and don't act on impulse and take a trade that is not your model. Okay, so I'm sticking to my model and it's not presenting itself, so I'm not taking a trade. That's it. It's easy as that, so don't make it too complicated. Let's see. Trade lower once more. We have rejection block in here. Okay, so lows down, close candles, closing price, extended closing price to the right, wick lower into it, but the price got rejected off of it and is now trading higher during or just ahead of the macro. Okay, so 950 to 10. Let's see how price. Yeah, let's see how price is using the macro. So, new week opening up. Potential inversion fair value gap in here. That's kind of ugly, orange. But yeah. First presented fair value gap. It's being used in here. See this candlesticks wick. Use the low of it. That's a huge wick. So we need to get above this wick's midpoint. Which we can, when we eyeball it, it's right around this wick's high. So somewhere in here is the midpoint of this wick. So we gotta get through it. If we can close above it, then the next, yeah, defense pity ray is here that we should inverse. Let's see. Let's check the 50-minute chart. Okay. 1 hour. Hour. See, this is an auto block. So we can actually grade this auto block. Let's have a look at the 8-hour chart. Okay, yeah, 4-hour chart. So we traded down into. So why is this an auto block? Okay, so we had relatively equal lows, and this candle took out sell side and traded back into a fair value gap and the breaker that what I was talking about. No, the breaker wasn't here, but yeah. fair value gap, trade it back into this fair value gap. Okay, so that's a 4-hour order block. And the new week opening gap, coincidentally, is exactly at the midpoint of this 4-hour order block. Okay, so that's interesting. See how the 50-minute chart respects the upper quadrant of the 4-hour order block. This thing as well. This wick, the bodies in here respected. Here it respects to the tick. Okay, no displacement in here. Use first percent fair value gap. Yeah, it's high resistance. So I mean, I can see the narrative. Bias is bullish. Want to see relatively equal highs taken out. These ones and maybe these ones as well. But yeah, high resistance. So makes it even more difficult. I'm looking for order blocks or fair value gaps. Best case scenario, both of them agree at the same time for me to take an entry on. In this case, looking for a long. But yeah, it doesn't give it to me. Potential inversion fair value gap. Price rejected off of it. Use it once more in here. So yeah, we're kind of banging around. See the 4-hour order block levels. The red line is midpoint, upper quadrant, and the open of the 4-hour order block. And look at the bodies. Okay, isn't that interesting? Isn't that interesting? That is pretty interesting, in my opinion. So we have midnight opening price above us as well. So if you want to get long, you want a long somewhere around the 12 a.m. midnight opening price. Okay, let's annotate it in turquoise. 12 a.m. open. So we are right at the midnight opening price. Yeah. Change in state of delivery right here. Okay, if a price wants to go higher, should respect this down close candle. yeah, you gotta consider the price, yeah, the conditions that we are in right now, and obviously, like I said numerous times now, I'm repeating myself, guys, but bro, it's just people get chopped up in this price action. Just it is just, I mean, it hurts. It hurts. So just either don't trade, no, rather don't trade today. Sit through it. It's lag day, okay? To be honest, Monday is technically lag day for me, so I was in the gym today in the morning, hitting legs, doing some, some squats and stuff. So I already have leg day behind me, and then we have another leg day in the charts. Tough day, tough day, but just sit through it, endure it, and you get stronger over time, man. Training is like, building muscle. You gotta get in the repetitions, gotta do reps after reps after reps, and over time you gain more experience. You know what you can do better to build muscle better and faster and maintain the muscle and grow it and whatever. And same thing in the market. The more you see things repeat, you're just training your, I don't know, your recognized patterns better, algorithmic price signatures that repeat. So learning's part of the process. So so that was moving sideways. Same thing. Yes, as well. So yeah, that's confirming high resistance liquidity run conditions. So just take your hands off of the charts. I don't know. Am I the only one? But I got a feeling that recently, like, reading price action and anticipating it is like much more difficult. I mean, yeah, I can say, okay, my narrative bias is bullish. I want to see this, this, this. Okay, fine. But taking a trade off of it, like with having all these sideways consolidation type shit, stupid ass price action, it just, it's not impossible, but it makes just way more difficult than I'm used to. You know, reading charts, reading the tape in the past was way easier. I feel like than over the past 2 weeks. I don't know. I don't know if I'm the only one who's struggling, with this kind of price action, but it's insane. I mean, look at the previous day, right? Which was last Friday. Look at last Friday's opening range. I mean, let's turn on the indicator. So we have pre-market 7 to 9 a.m. And then we have 9:30 opening, and price just, bro, insane. I watched a couple of live streamers on YouTube, and they got chopped up. And if I wasn't careful, I would have been chopped up too. So I didn't take any trades in here. I was looking for TGF, which, delivered this price run lower. So I was looking for lower prices, but yeah, frame a trade around, take a short in here. So it's not that easy. It wasn't, at least for me, and I mean that's cool, you know, but we get more of these consolidation type 9:30 to 10 a.m. bullshit price action opening ranges, like we have today as well. So I don't know, just difficult. It is just difficult. Trade it back down into Fair Value Gap, first percent Fair Value Gap once more. What's up, YouTube? Okay, so back into first percent Fair Value Gap. If you're wondering why I'm looking down every time, I'm looking at my phone, having a look at, you know, the live stream and see if everything is working and if you guys write something into the chat. So we have 2 viewers. I hope you guys enjoyed. I hope you guys enjoyed this beautiful prize action. If you have any questions, feel free to ask. So yeah, still looking for higher prices. Buy side is too obvious. High time frame bias, daily chart bias is also bullish. In my opinion, if we have a quick look at the daily chart, my goal for this week would be this high. That would be great. I hope you don't get a sideways consolidation type week. I mean, we kind of had it last week, then a mid-week rally. So, I mean, yeah. Previous month's high, the next target. And yeah, so high time frame bias is bullish, at least for me personally. I'm looking for higher prices. Okay, do we get a 10 to 11 a.m. silver bullet? I mean, if I'm looking at the new week opening gap, like I said, I'm bullish. And I would prefer price to respect this order block and find its way going higher. But technically, we only wick lower into the new week opening gap, so it is not balanced. Okay, for the new week opening gap, which is void of any trading. So what do I mean by that? So we opened and we closed 4:59 on Friday, and open at 6 p.m. Okay, so in between there is no body buying or selling anything at that price from above here to down here. Okay, so that is completely imbalanced. For price to balance this price range, which is inefficient, it needs to lay bodies on top of that range. and we only wicked into it, so the rest of it is still imbalanced and inefficiently delivered. So I would prefer price to wick into it and then and then show market structure shift higher to take a long on. Because if we can leave inefficiencies open, that is like rocket fuel, okay? That is going to push our trade into our favorite side, like, which is bullish, okay? The fact that we trade down into it once more, that's not too bullish, because yeah, seems like price is trying to efficiently deliver this new week opening gap first, and then we may see what prices wants it to do then. But seems like it wants to efficiently deliver this new week opening gap first before it does anything else. And yeah, so every time you see a black hole like in here, that's a huge magnet, okay? So that's a huge magnet for drawing price into it. So don't disregard it. Be careful, pay attention to it. Trade it up into this fair value gap once more in here. Rejected. Went lower. Back below the first presented fair value gap. We have initial sell side, first 30 minutes of trading. The first sell side liquidity down in here now got taken. Relatively equal highs. So let's see if price wants to trade to the new week opening gap and then go sideways to deliver it efficiently. That's what I can imagine price is going to do. You know, build bodies over bodies over bodies over bodies, sharing the same range on top of that new week opening gap. That might be possible. Seeing lower prices, even lower than the new week opening gap, I would prefer price not to do that. Since our bias is bullish on the daily chart, I want to see higher prices and not coming back into the daily fair value gap. Which is shaded in blue. That one I showed you in the beginning on the high time frame charts on the daily chart. So yeah. Okay, sell side taken. Beautiful rally. So this is what I would have preferred price to create in the first 30 minutes after taking sell side. So price took out the sell side of this run, and then as price created this market structure shift in here, I would have liked to see that in here without having or going into high resistance sideways price action. So that was actually what I was looking for. In the beginning of the New York session, we didn't get it. Had lots of sideways movement. And to be honest, I don't want to be the one who tries to pick the point in time where we end consolidation. So I want to see price confirm to me that it wants to leave the consolidation, and I don't want to try to pick a point in time predicting that now it leaves it, because I've taken losses over losses over losses trying to pick the exact time where I was like, oh yeah, now it looks good, even though yeah, we had the consolidation over the past 20 minutes. Now it looks beautiful, now it ends the consolidation and I'm going to take that trade and be profitable. Nope, you won't be. 99% of the times you won't be the one who's picking the end of the consolidation and you get chopped up, and afterwards you wish you would have not done or taken the trade. So yeah. So what is price doing right now? Trade back into discount below the equilibrium. So we trade back into discount PD array, 4-hour order block, value gap in here as well, inversion for value gap, agreeing with the new week opening gap. So let's have a look at where the 4-hour chart, 4-hour candle closed. So it closed in here 30,234. 234. Okay, so if you wanna look for an end of the consolidation, you would need to look for price respecting PD arrays again. So as you can see, first in fair value gap, we traded through it again. Yeah, we kind of used its high in here, the wick in here, using the high, but yeah, no real using. It's not really used the midpoint or any other levels. So came back through it again. Okay, used the midpoint in here, traded up, down through it again. Took out sell side. Okay, doing the macro. Bodies closed above this low. So that's bullish. Wicked into new week opening gap. Quick reaction higher. Breaker. Or mitigation block. Auto block. Okay. Price trading higher. Down into first % fair value gap. Respected it. Okay. This is an auto block. This down close candle is an auto block. Now, the sign for me that the consolidation ends would be price now continuing bullish order flow by respecting this down close candle. Okay. If it disrespects this once more, I mean, we are likely to see a little bit more consolidation. I mean, we have this fair value gap in here, but preferably it should not even come back down into it because we have 1% fair value gap. So if our bias, which is bullish, is correct, we should now see down close candle support price higher. Okay, so we trade back down into, yeah, okay, now we disrespected that one. Trade into 1% fair value gap again. If we close again below it, yeah, see, I already don't like how we close below the midpoint. So either my bias is wrong or we just keep on moving sideways. Price is being heavily manipulated right now. It's being held in a narrow range on purpose. Why? It's Monday. It's the first presented day of the week. Okay. So every beginner trader out there is trying to rush into the opening range on the first day of the week and burn themselves. Trying to catch a breakout and chase price. And everybody who chased price high in here got chopped up. Everybody who chased price low in here probably got scared out of the trade or chopped up as well. Everybody chased longs, done, stopped out again. Everybody who chased sell side, trying to short the breakout below this low, is now witnessing a deep retracing against his position. So yeah, I mean, don't touch it. It's also no news Monday as well. So we have no news Monday, first business day of the week, with having FOMC on Wednesday. So this day is designed to just destroy you, okay? As we can see here, this is a repeating phenomenon, okay? No news Mondays. Welcome to trading. Damn it. Tuesday, no news Tuesday as well. Tomorrow, we don't expect any news coming out tomorrow, and Wednesday, FOMC. So you can expect Monday and Tuesday, like I said in the beginning of the stream, to be a little bit more difficult to navigate around. As we can see again, close below the first fair value gap again. So, I mean, hell no. No, 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 no. I'm not getting chopped up in this BS in here. Hell no. Okay, it seems like price moving lower. Where can it go lower? What's the next sell side? I mean, we have new week opening gap. Apart from that, Mm-hmm. Today's 17th. A week opening gap once more. Oh, crazy town today again. Okay. I mean, still inside a new week opening gap. Bro, that's a tough session. 1 hour of sideways price action is insane. That is insane. Insane. Okay, so I mean it's almost 10:30. And we kind of did nothing. Price is still respecting the new week opening gap. I mean, buy is still bullish. So I mean, I guess I'm going to end this live stream a little bit early today. I mean, price seems like it's not wanting to leave this consolidation, so I'm going to watch and see price when price looking for these highs in here, and how it's using the new week opening gap to go higher or lower. That's what I'm having a look on. And yeah, I hope you guys enjoyed it. A boring session today, gotta be honest, but it's leg day, so you know, don't skip leg days. You gotta endure it in order for you to grow. I mean, it's simple, it's boring, and it's the boring sessions that you need to endure in order to grow and develop. So, first rule is to preserve capital, and if you preserve capital and avoid losing trades in this price action, you've done great today. And we done great today. I did great today, and you guys did great too if you avoided loss. And you should focus on low resistance liquidity around conditions and take advantage of that and avoid these ones. And that's a good way to profitability. So I hope you guys enjoyed it. I'll catch you guys in the next one tomorrow, 9:30 a.m. live stream on YouTube again. So yeah, hope I catch you in the next one. Lord willing, we see each other tomorrow. Be safe, guys.